What was your primary takeaway for those who missed the show onto why we did roll over kind of suddenly and a little bit oddly yesterday afternoon, Tim?
It's so easy. It's overly easy, Brian, for me to say we sell the fact and that there's actually, now this V-shaped recovery that needs some kind of new stimulus. Look, the construction spending number yesterday is a reminder that people are focused on growth issues in the global economy, but maybe possibly now the U.S. economy. So I think it's a very important week for macro data. And then layer in that you've got an ECB policy decision on Thursday. I think they're going to give you more LTRTO, whatever that means, which means basically banks can feed again at the trough. And then you have Fed Powell again on Friday. You have a ton of Fed speak this week, a payroll number Friday, PMIs, ISM, you name the initial. It's happening. So we're confronted with the global economy. We're confronted with remember, a growth fear is worse than a recession. A growth fear is significantly worse than an inflation fear. And I think that's what the market is deciding to determine whether this week we should focus on.
With all that stuff, if you bought a Val, you'd have solved the puzzle by now, my friend. I mean, it feels like a market puzzle. Because you got Brexit, you got China. Of course, you're the emerging markets expert, really. You've got all these things that you mentioned. Of course, our Fed kind of overshadows that all. Is our Fed and its newish dovish stance so important that even if we don't get a Brexit deal, and if we don't get a trade deal, are we going to be okay from a market's perspective?
Well, I think you're right. I mean, if you think about the most important development of the last 2 months, it's not that we've been slowly easing into the concept of a trade deal that we still don't know details on. But you can make an argument that a lot of this has been priced in. So, yes, I think the Fed is the predominant player. And to be clear, the Fed's in a very difficult position because the Fed, who targeted asset prices on the way up, must understand that asset prices, which equals financial market conditions, will be suffering as they remove more. We may even hear more about balance sheet normalization on Friday. That's effectively the title of Powell's speech. So the Fed, to me, still is number one. If we have easy policy, and let's leave aside whether that's the right medicine for the long term for the markets, and we could get existential about this because central banks are probably a big problem for us as we think about what's going on. But
there are three big things that I do not understand in life right now.
Okay, I'm not sure I can help you.
The Kardashians, the Mets, and why the Chinese domestic stock market is up 22%. Can you help us with one of those three things?
Look, as a long-suffering Mets fan, I don't appreciate you firing that at me this early in the morning. And no, I can't help on that. And the Kardashians, I'll leave that to somebody who's much smarter than me. China is up because, first of all, valuations at some point start to matter. I think people who equate the Chinese stock market with the Chinese economy are also off base. I think the reality is that if you look at how China and even much of Asia reacted to the minute those trade lines hit about a year ago, it was oversold. And the reality is, I actually think, and you talked about the downgrade of the Chinese economy coming out of the People's National Congress. Big deal. We knew that. If anything, talk about $2 trillion in yuan stimulus tax cuts that are thrown out there in the last couple of days, triple R cuts. The fact of the matter is, I think Chinese economy is probably bottomed for the short run. It's not going to get away from us, but I actually think China continues to go higher. Mega cap Chinese stock, look at an Alibaba, which is up 45% in 45 sessions. I think we've talked about that name. You get a place where sometimes valuations become compelling. At this point, I actually stay long that trade, but I do think that China can continue to run.
Yeah, I mean, listen, they came out and they cut their growth forecast. They cut the number of jobs they expect to create, 13 million down to 11 million. Pretty much everything at their People's National Congress overnight was a cut. And yet the Shanghai Composite goes up another 1%. The Shenzhen now up, 27% in 2019? Are they in their version, I guess, of quantitative easing, which drove our market so strongly for years?
Well, if you think about how badly back-footed China was policy-wise when the trade war started, this makes a ton of sense. And if you think about central banks who have reversed gear, we've talked a bit about the Fed and the ECB, why not? Why not the People's Bank of China? So the reality is that they have a lot of different tools in their toolbox. We've always argued that their transition to a higher value-added economy was going to be challenging. But yes, I think China can continue to grease the rails. People talk about, hey, China can outweigh us in a trade war. They're playing the long game. Bottom line is they still have to feed their economy. And I think everybody knows they have a credit issue. And that really was what they were addressing. You had record credit expansion in China in January and February. You tell me what they're doing. I think that means they go higher.